Ben, so yeah, there's a little bit more of this narrative that's growing that these crackdowns we're seeing, whether it's in tech, whether it's in property in China, it seemed to be coming to an end, or at least fading right now. Do you subscribe to that view that the worst is over?
Good morning. Yeah, I think this is an absolutely key question. I would slightly frame it differently. It isn't that we've come to a peak and we're going to roll over. Excuse me. It's that we've come to a peak and are now going to stay at this level. So if you want to continue with the mountain imagery, I would think of Table Mountain on the outskirts of Cape Town in South Africa, where you have a rise to a new level, I guess, of regulatory oversight, scrutiny, and indeed pressure, and it's going to stay there. So I think the story for us at the BlackRock Investment Institute isn't that the regulatory pressure is going to lessen. We do not think that's going to happen. But it's that the market, of course, has got a much better understanding of where the level is. And it's the change in, I suppose, which is the key driver of risk. And clearly, if you look at the performance of some of these tech shares approaching bull market territory, astonishingly over the last couple of weeks, it seems that the market has got a much higher degree of comfort that they have some better understanding of the level of regulatory scrutiny, which is now here to stay.
We are approaching a bull market for some, but that's also, I guess, to qualify also, Ben, we are coming up quite some lows there. I guess to your point, then we are moving into earnings season in China. And, do you think there's enough buffer in these valuations just to make up for that uncertainty that's left there on the table?
We think so. So we at the BlackRock Investment Institute, we turned moderately overweight Chinese equities on September the 27th. So we're dipping our toes back in. And we do think there is room for more tactical upside, really for the key reason that you mentioned, which is just good old-fashioned earnings, I guess. We're in a world which is starved of income, and within the equity space, I guess the attractions of sustainable, high-quality cash flow. And when we look at some of the big companies in China, they're very good companies, which seem to us to have the potential to continue to generate that kind of cash flow, which is globally still very in vogue. Clearly, over the last several months, there's been this regulatory downdraft, which has been real and has obviously impacted upon prices and sentiment. If it is the case that the market has got a better understanding of that now, and the market has continued to be resilient through that, then there is the risk, we think, of further upside from here in China equities, if indeed that sentiment can bottom and start to turn a little bit more positive, as frankly can often be the case with sentiment following price many times.